What's going on, Ian? Welcome in, welcome in. What's going on, guys? Welcome in. We'll get started here shortly, real quick. Daniel, what's going on right off the bat? And damn, these tickers. FUBO, QS, BYND. Ew. I'll take a look at them for you, though. We'll get started here just shortly. About a minute or two here. Um, Hopefully everyone had, I want to say, a decent day. I know today was definitely not ideal price action. I don't think anyone expected any kind of the price action that we had today from the start to the finish. So it definitely was quite the day to even just put it in context right now. Given the fact that I think more so yesterday, we were expecting a little bit of a gap up type scenario, so it would give us the opportunity to short. But they ended up pretty much just dumping us right into the feds. That was just not a pretty sign that we got there. And just the fact that we had that little bit of a seesaw type action that following the feds minutes, that was also not anticipating the way that they pretty much ran that play towards the end of the close. So definitely a rocky day to say the least. I want to pretty much be, but I think if the biggest takeaway that I got from today was pretty much just making sure that you lock profits today. That's really the biggest thing because imagine the fact that if you pretty much play it out how today's action was, if you didn't end up selling on the wick to the upside on that 5 minute candle from the following the Fed minutes, you literally got rocked. If you tried to buy the bottom when we started to sell off, you pretty much got rocked as we pretty much tried to make a higher high. Then if you didn't take your profits there, you're 10-15% on that higher high, then you literally got rocked again because we pulled back to try and make a higher low. So definitely some crazy price action that we got today. Tom, what's going on? Kevin, on my Friday, SPY 450 calls F. I love questions like that. I'll get to it in a second. I'll get to it. So definitely today, if the biggest takeaway was pretty much the fact that you want to make sure you lock profits right away. That was the biggest takeaway that I got from today, and I think everyone should have got today. Is that just a seesaw action that you got following the Fed minutes? You saw that you had an opportunity to make that 10-15% in both directions, and I think it ended up happening multiple times. So that was my biggest key takeaway. But as far as pretty much looking at SPY, following the Fed minutes, after I saw we made that quick wick to the upside, which with FOMC, those of you that are not familiar, usually that 5 minute candle following FOMC minutes that come out, you typically get first reaction being the wrong reaction. So today we basically got that spike up on that 5 minute candle, and it immediately got shorted, and we came right back down. So that's exactly what I mean by that. Is that usually that first reaction is the wrong reaction. And so once I started to see us really just start to bleed out, once we ended up losing that support that we basically had right around that 445 mark, that's when I started smelling trouble. But as I usually keep it pretty simple and clean on my SPY chart, I was basically just having a anchored VWAP that we had basically from our high that we put in from January 4th. I had an anchored VWAP that I was basically just sitting right there. In terms of maybe a rollover, a bleed out, which we basically got close enough to today, I was watching that anchored VWAP at 442 half basically, and that's what I wanted to see pretty much get filled at that point. So I'm gonna see tomorrow now. Do we end up continuing to build off of today's lows that we have? Or do we end up getting lower in which I'm gonna get to that anchor VWAP that I have 442 half. Maybe we get a wick down below, probably touch my support I have here at 441, and then we start to build a higher low basically. That's pretty much what I got as a takeaway today. So that's what I'm going to look for in terms of the upside there. Otherwise, if we look for a gap up tomorrow, then you're basically looking for to take out the high that we have today's price action over that 449, and we'll see if we can start to build some momentum. The only thing I don't like today is obviously a lot of these tech names. I didn't see a lot of strength out of any individual names. Of course, Tesla's usually the one that's always on the watch here. Tesla's actually right into a gap fill right now as we close here. I think that stretches down to about 1021 to the downside. That's not a pretty sign right now because that could easily be filled by morning. So my ideal scenario would be that we pretty much get a gap down tonight. We pretty much digest whatever the FOMC minutes came out, which was pretty much in line with what we expected, the market expected. We get a nice little gap down tonight, and then we start to build off of that with a V-shaped recovery, build momentum, and then we like to close the week strong. That would be the ideal case scenario right now. But I'm looking to see if we break this 442 half below that. I'm gonna really just be a bear, if I want to say that, the better term of that. Under that 442 half, I pretty much am expecting us to go down towards 439, 438 will be my next stop, and that's not going to be pretty. Otherwise, we try to hold that anchor view up at that 442 half, and then I'll start to build my case right back to where we pretty much closed today, and we want to break that high of 449 basically. All right. So that's pretty much what I'm watching with SPY. To really answer your question directly, Kevin, I don't think that your 450 call is necessarily screwed. It's just that you may end up having to endure some pain overnight here, just because of the fact it all depends how market makers are going to digest this Fed minutes. That's basically what it is. Because usually the first reaction, again, the 5 minute candle is going to be the first reaction is the wrong reaction, but sometimes you get a flip of the script overnight, and that's really the more concerning part. What I don't like is the fact that we didn't necessarily close on a high note. Is pretty much what I didn't like, and that's why I'm leaning towards the fact that you're gonna end up having to deal with some pain for those 450 calls before we get a nice little V-shaped recovery. I want to say, so that would be my only caution, my only concern for you, though. All right. But again, I literally just kept it simple. I didn't necessarily try to catch the bottom or the top following the FOMC minutes. That literally you hit two upsides, two downsides. If you didn't take those 10 to 15% profits buying either one of those, the top or the bottom, you literally got wrecked, vice versa. All right. So that's pretty much just looking at SPY. I think tonight would be a telling story by morning. Whether we pretty much gap down, we'll look for the V-shaped recovery. If we pretty much gap up, then we'll likely start to build some momentum off of that. All right. Let me get into some of the names that you guys really wanted to take a look at, because I know that today pretty much rocked a lot of the tickers that maybe you guys are holding, maybe some that you feel like you're kind of bag holding right now. Twitter was actually one melody that, to be honest with you, and Daniel, I actually did skip over you. I'm gonna grab to you just for one quick second. But Twitter was actually one that I was kind of gonna lotto off of this, to be honest with you. I almost took calls on this. I believe it was about the 55 calls. Is pretty much what I was watching. I wanted to see us pretty much test this gap fill. I was going to feel a lot more comfortable with that. I was hoping for that to end up happening today. We test that gap fill at that 46.86 mark with the market volatility that we got today. That was not the case, so it definitely was a good sign for me. So I'm going to look to see if we build momentum over 51 half is where I'm going to see that we start to build momentum, and we're gonna pretty much get right back into my supply zone that I had of breaking over that 54 half mark. We break the 54 half, we're looking at 55, but here's where the pretty much is gonna be where a lotto would pretty much make sense. Is that if you were to get 55 calls overnight, it would have made a lot of sense. Tomorrow we can pretty much make a push towards strong, towards 56, 57, in which I think that we can make a strong move towards 60 by the end of the week, for that matter. All right. So that's ideally what I'm looking at. It's held through this entire volatility that we've had these past 2, 3 days here. And that's what's actually caught my attention. We have a lot of buyers pretty much just, I want to say trapped, but we are pretty much consolidating off of making that prior high here from that 54 half. So buyers are still here. There's very minimal sellers that we can say. And I think a lot of those sellers right now are pretty much trapped in this because they're pretty much looking to see that we're going to test gap fill and break into the gap. I don't think that's the case right now. So buyers are in control is what I would say right now. We break over that 54 half. It's a good chance that we likely see 56 here. And I'm going to be looking for a $60 lotto call likely tomorrow morning. So all depends how we open. If we can open pretty much close enough to that 54 half, I'll likely get a $60 call lotto for Friday. If we can't, then I'll pretty much just likely play it in the money maybe. Just depends. Of course, about the broader market will be my bigger decision point. All right. But I do like this one in particular over the 54 half. That's when we're really going to start to build on this. And we'll see maybe a potential, like, I want to say squeeze because obviously this won't be a squeeze ticker. But we'll like to see a lot of buyers. The tape is going to be flooded. And I expect to see 55 and 60 calls just flooding the tape tomorrow if we can build momentum. All right. So I do like this one. I'll likely give an update. It just depends how it is pre-market tomorrow. Daniel, you gave me quite a bit of tickers. So I'm gonna see if I can run through them really quickly and just give you a quick take on them. FUBO I don't like right now. I'll be honest with you. Obviously, I see that it's trying to build a base, but what you basically are trying to flirt with. Let's see if you actually have a double bottom for a case here. 601, 605. So you may end up trying to hold the bottom here at this 6 flat. That would be your ideal spot right now. Otherwise, one of the biggest things that I usually say is that you have a well-defined downtrend. I don't like that in any case scenario, having a defined downtrend. And right now, you're just sitting in a cushion right now of $6 being your pretty much your bottom level support right now. You would ideally hope to double bottom off of that, but I don't think that's a very strong double bottom right now. So you're pretty much flirting with making a lower low at this point right now in time. All right. So, and it hasn't even crossed my cloud that I basically have right here. So that even is even worse. If you would have probably got a move over my cloud, I would have said that maybe you have a potential to break that downtrend. It's not even looking like that. So this one, I would stay sideline. But if you really wanted to nibble at it, you look for that $6 mark on the nail and you try to go in on that. The other one you mentioned was QS. I have a feeling this is another one. Actually, no, this one's actually not that bad. I take that back. I thought this was another well-defined downtrend. This one I can get behind off of. I don't mind this one. 1833 will be your potential buying spot. Likely want to see this hold that 21 EMA cloud here right now. But I do see that we tried to break out of it today. Obviously, we couldn't hold because of market sell-off pressure. But your buying spot right here will be 1833. We like to see a move to get back over that 20 half. And that'll be where you start to build momentum to take out that prior high from yesterday. All right. But 1833 is your buying spot. You want to see the break over the 20 half. And then we'll likely build off of momentum over the $22 mark. Over that $22 mark, then you're pretty much just sitting right where you had prior distribution right here, and that'll be where you're looking to pretty much gauge towards 2480 because that acted as basically your prior distribution spot before you had this nice little breakdown right here. So you had that little distribution, and obviously you see that led to a massive sell-off. So that 2480 would be my ideal target spot overall, but you want to pretty much try and get in as close to the bottom here, that 1833 spot. All right, but I do like that one in particular. That one is pretty nice. Last one you mentioned was BYND. This one well defined. I don't like this one in particular. There's nothing here that tells me that I want to step in on this freight train right now to the downside. Um, my ideal support level, which pretty much cracked, wicked off of it, was that 4280 mark. It looks like it's pretty much gonna likely continue to melt below that. You also do have a tiny little gap fill here below this 39.39. That's a little bit noticeable as well. If you can somehow manage to hold this, I want to say 41 flat, that would be the spot where I nibble at this. And that's why I say nibble because, again, well-defined downtrend. Nothing tells me about a reversal here back to the upside. But that 41 spot will be where I look to see if we can build a base off. As you see, that was a prior level that you tried to build a base before you just had a kill candle go right through it. So 41 would be that spot you want to see hold. If you can build pretty much a reverse off of that 41 spot, then you basically want to make a move right back over 47. All right. But that one I'm not particularly fond of. If I had to pick one out of the entire three that you gave me, QS would be the one that I would pick for you. All right. Let's take a look. Let's see what else. Um, Kevin, you got rocked. Ouch. That hate to hear that, my guy. It is what it is. Today was definitely one of those days, and I didn't even know that I had UPST marked up. That's pretty wild. This one I'm not too fond. I think I heard Avery mention something about UPST today, if I'm not mistaken. It's been pretty much a wild ride on this one for the most part, and I'm actually just gonna clear the chart just to see if I can get something eyeballing off of this formation. But I don't necessarily like this. I wanted to say this was a little bit of a right shoulder, but it didn't necessarily make pretty much complete a neck hit line on that right shoulder. So right now it just looks like a very ugly formation to me at the very bottom here. I can't even say this is a diamond bottom because it doesn't even look like a diamond bottom to me at this moment. If I'm pretty much just going off of where your demand level is, and this is where I would say, purely demand in which you would see buyers try to step in here, this would be your spot that I'm looking at right now. So between this level, as far as down as 91, that low 91 will be where I expect buyers to try to step in to cause a reversal That would be the spot that I would try to take a position in on this one. 91 would be that spot where I would try to go long on it. If you end up breaking down pretty much below 90, that would likely be a stop loss because I'll keep it very tight with. I wouldn't even be playing with this because this can end up really just starting to nosedive. So 91 would be the spot I would look to pretty much try to go long if you're trying to play it for a reversal. Obviously, this is still a well-defined downtrend. Nothing says that I really want to catch this, but based upon a demand zone as prior, 91 would be that spot where I would look to see buyers try to step in, cause a reversal. Otherwise, you lose 90, then you're pretty much flirting with taking out this wick low that you have down at 75, and that's not going to be pretty. All right, so that's pretty much what I would say about that. Going down the list real quick, someone mentioned KR. Isn't that Kroger? I think that's Kroger. Yeah, it is Kroger. Okay, I was about to say. Um, what can I say about this? That is a hell of a wick. That looks like a Dougie wick. Those of you that are familiar with Dougie, 6258. That's a beautiful Dougie wick in the making right there. Just trying to see, is this all time highs right now? Let's see the monthly chart real quick. Yeah, that is all time highs. I just want to double check that. Who just messaged me? Okay. Let me take a peep real quick. Let's see where we need to break over. Obviously, that wick high is pretty much what I would target right here. This is kind of feels like more so like one of those value plays. Obviously, I've been talking a little bit more so about the value plays outside of tech plays. I think Walmart's literally just been one of the biggest bangers that I've been on for maybe about a few weeks. We hit a brand new all-time high on that one. So this one, if you pretty much get that break over here, we want to see we get over that wick high that we have back to back here over that 59.20 mark would be where I would say that you try to go long on this 59.20. You stay long. Obviously, you don't want to go weekly, and being the fact that next week is a short week, to be honest with you, I would probably go about 2 weeks out on this, if I'm being really honest. And we try to make that slow grind up to fill this Dougie wick up here at that 62.48. So that's pretty much what I would say about this one. It's just gonna be a slow grinder. I want to say it looks a little bit more like an ascending triangle formation right now. So you may have a little bit of a tough time trying to break out of that. As you see, you pretty much wicked it twice. So you may end, but the only thing I like about that is that the wedge is pretty much closing in right now. So you're gonna have a little bit of a chop here going into the end of the week. Between this 58 to high 57 mark, the wedge is gonna continue to close in on this ascending triangle. And that's why I say give yourself a little bit of time. Come next week after we break out of this ascending triangle, you'll get the breakout. Then you're likely going to end up getting a retest right back down to that low 58 mark. And then you'll see the continuation mid next week going into the following week. So give yourself time on this one. I wouldn't even mind going out towards 65 calls on this for about 2 weeks out and you let it roll like that. All right. And that's how I would pretty much play that one out. Let's see what else. What else? What else? CCJ, isn't that one that we had? I think we had unusual puts on this one. If I'm being honest with you, I believe I heard unusual puts come out on this. Let's see if there's anything that crosses my mind on this one. Let's see first if we have a decent trendline support. That will be probably the first thing that I pretty much want to look to see if I can identify. Do we have a decent trendline support? Will be my first factor right now. Let's see as I chart this. Blech, this looks disgusting. All right, let's bring it down. All right, there we go. So here's our trend line support. Obviously, you see that we pretty much wicked it quite a few times. We wicked it off today. We held that 21 EMA cloud on the daily here so far. So we haven't broken the uptrend just yet. That would probably be the biggest part that you definitely want to understand. We haven't broken it yet. In terms of pretty much your resistance point, I would pretty much be looking out towards your wick highs here in which you want to see this make a move. So you basically made this into a little bit of an ascending triangle type formation here as well, right? As long as we pretty much literally get your wicks down below, you'll be fine. But you want to see the body of the candles pretty much close above this 28 mark. As long as with the bodies of the candles here within the next day to two here can hold that 28 level, we can continue to see this close within this ascending triangle. And then we get a beautiful breakout over that $30 mark that we continue to wick out pretty consistently back to back here. You've seen those 2 weeks. We want to get a body of the candle over that $30 mark, and then we'll be able to see a beautiful continuation. But 28 to 30 right now. That is pretty much your range that you're looking at pretty much on looking at CCJ. Forgot who asked me about Wiley. So Wiley CCJ 28 to 30. That's literally your range that you're trading in within right now. Until it literally breaks one of those price points to the upside or the downside, I think right now you try to stay clear. If you're literally trying to buy it off of support, you try to pretty much buy it at that low $28 mark, maybe catch the wick below the trend line, and you pretty much play the bounce. But I would, me personally, I would wait to see it break either or above 30, or you see the body of the candle close under that 28 below that trend line support. All right, but yeah, it has a beautiful little ascending triangle. I like that formation. Skillz. Let's take a peep at Skillz. Um, this is one does have a little bit of a well-defined downtrend. The only thing that maybe you do have going for you is maybe these wicks pretty much align as they do. I think that's something that just caught my attention right off the bat. Those wicks pretty much align, and I'm actually gonna get rid of my email clause because it is getting on my nerves looking at that. Let's see our upside here real quick. So nice little falling wedge type action you have off the daily here. In terms of range in which you're looking at, you're basically looking to buy off support. Your buy off support will basically be right around that 278 mark, and you're looking for a breakout above 315. That's the range that you're looking at in between this. So you're going to continue to trade this range basically until the end of the week here. I don't see a breakout happening until next week at the earliest. So if you're looking to buy, you buy off support 280 roughly, and you're looking for the break over 315, and that's likely not going to end up happening outside of those ranges until next week. So that's pretty much your big point right now. If you're able to get that breakout over that 315 mark, then I would potentially look to see if you can target here as high as four half. All right, so $4 and about 50 to 60 cents will be my overall PT on this one. All right. And I think that's pretty much a wrap. Well, I skipped over someone. All right, copper. You'll probably be the last one that I look at because you gave me about 3 tickets there. So that'll be the last one. I'll probably wrap it up there for you guys. Hopefully, kind of helps you guys as far as what I've looked at in the meantime. SoFi, well-defined downtrend. Nothing says that I want to step in on this. If I'm being honest with you right now with SoFi, your ideal support level is at $8 and a half. So 850 was your ideal support. You wicked right into it, tried to reclaim right above, but 850 is a support. If you're trying to buy this, you buy that 850. If you end up breaking the low, that's not going to be pretty. So 850 is your buy-in spot. You break $8, I think that's your stop loss. Trying to play this. Obviously, it's a very small cap name. So 850 is your buy-in spot. You lose $8. That's your support. I think that you play it as your stop loss, and that's pretty much the best case I can tell you. This is just pretty much a well-defined downtrend. Nothing says that I want to step into this because nothing tells me that it's preventing it from basically making a lower low on this one. But 850 is your entry. 850 will be your $8 will be your stop loss on that. Other one's Palantir. Wow, Palantir actually broke the downtrend. That is actually quite interesting. I'm actually very shocked about this. All right, so let's see where our demand level is right now. That's probably be the biggest thing that you definitely want to identify right off the bat. Let's see if we can identify that zone right now. So this will basically be that ideal spot that will look to be your potential demand zone right now. All right. So if you can pretty much get into the zone here between $12, 12 half to $12 flat will basically be your potential buy-in spot. You're basically about what, a dollar shy of that. So you could see another leg down here, about another dollar to the downside. You pick that up at 12 to $13 there. Well, $12 to $12.50. You'll buy that at that spot. You'll look for the reversal. Try and make a high over 13.5 to get into this gap that completes at 1486, in which 1486 would ideally be, personally, if I'm trying to buy it down at $12, I think if you get that back up to 15, back up to that $15 mark on the completion of gap fill, that'll be where I pretty much look to take my profits and close out entirely. But if you're trying to go for the long haul, and I say long haul in the case that you're trying to go very long, if I'm really trying to play it out that long and I'm basically looking for maybe a few months out, you could probably stretch this as far as $17. And that'll probably be a few months out. That's what the key word is. A few months out. $17 might be that stretch if you get a beautiful continuation. But other than that, I'll buy it $12 to 12.50. Try and play it out towards that gap fill of $15. And if you really want to keep runners for that long term position that you're holding, 17 would be my upside for you. All right. And then just covering the last one that you mentioned, DKNG. I have not looked at this one in a while. I've looked at Penn, but I haven't looked at DKNG. Damn, this one just looks disgusting. I remember I traded this in like the $50 range. It just looks disgusting down here. This is another one. I mean, another defined downtrend. Nothing tells you that you want to buy this. And obviously, if I just draw your defined downtrend right here, nothing tells me that I want to step in this right now because nothing's stopping it from basically trying to make another low here. But if I'm looking for where your demand zone is that you pretty much would expect buyers to step in on this low, it would basically be right at this spot right here. This is pretty much your demand zone right now. So between 1650 down towards about 16 flat, that's where you're gonna look to pick up DKNG. If you obviously break below that 1550 mark here, that's where you're gonna end up potentially making another low below $15 flat. So buy-in spot 16 flat to 1650. Potentially you can try and make it up back towards this defined downtrend resistance at that $20 mark, and then we can make a bigger push up towards 23 half. But this is a well-defined downtrend, so I think upside is a little bit limited. But if I'm nibbling at this, it's basically 16 flat to 1650 is where I'm trying to get a nice little entry before you potentially make another low. All right. So hopefully that kind of gave you ideas. This is the one thing. I mean, I know a lot of traders pretty much you try to find those names that are relatively cheap, but a lot of them are in well-defined downtrends right now, and that's why for the most part of these past few weeks, past few months, it's literally just been pretty much a lot of the mega cap names that's been doing a lot of the lifting right now. That's taking this market as high as it has been and currently still is. So once we start to see these names start to roll over, obviously we saw Microsoft down $10 today, Amazon down $100 today. I think Google Shop, all those other names started to follow suit. Apple was down $4, which we haven't seen as of late as well. When these names start to pretty much roll over, that's when it's going to get a lot more concerning because today just felt like a little bit of a sample size right now um, for what's to come within the next few weeks to few months. But I'm kind of neutral to bullish. I do think we're going to make another leg down here below tonight. Maybe a little gap down tonight. But then I would expect a nice little V-shaped recovery and we start to build some momentum in just the near future here. Maybe about a week or so, it probably holds. And then we'll likely be seeing if there's any headlines or some sort that pretty much takes us right back down. But as far as today's price action, those of you that maybe missed it early on, uh, everything that came out in the Fed minutes was pretty much in line with what we expected. Nothing was out of the ordinary. I did have an anchor VWAP down pretty much as far as down, basically around 442 half was basically what I was looking at. So even when we wicked up on that 5 minute candle with the FOMC minutes released, I was still expecting the downside. But I didn't end up necessarily trying to play that FOMC minutes. I did not want to get rocked between the upside downside. We had two spikes, two drops. That was just not ideal. And if you didn't hear earlier, the biggest takeaway for me today was one of those days where it reminds you that you definitely want to make sure that you lock those 10 to 15% gains in. Because if you tried to play the reversals on SPY following the FOMC minutes, you had a lot of emotions pretty much going through and you had your heart rate up as well. Because that sporadic movement up and down was definitely um, pretty telling on the fact that you were not certain about what was going to happen at all. And I think even traders that we have more experienced in the chat right now, they were even a little bit more concerned. You could probably point to a name like Gaston. Gaston's been around in our Discord for quite a while, and even today when he bought calls, he was a little bit questioning himself. So FOMC will do that to you. A lot of times, if you're not experienced with how FOMC pretty much works, you definitely want to stay sidelined. And that's actually what I did today. I didn't want to pretty much get caught in that. And today was actually one of the more awkward FOMC price actions I've seen because typically you just literally get that instant reaction of being the wrong one initially, and then you get the fall through in the opposite direction. No, this one we literally just got a seesaw. We went up, went down, went back up, and came right back down. That was definitely a seesaw in which that was a roller coaster of emotions. All right. So that was one of the biggest takeaways. Make sure you lock in those 10 to 15% gains right now, especially with the volatility looking like it's trying to kick back into the market right now. Be cautious about that. All right. But other than that, hopefully, kind of helped you guys with the names that you kind of threw out there to have me chart. We'll see what the market wants to give us tomorrow. That 442 half will be a big spot for me tomorrow on SPY because that is where my anchored view up is from the prior high back from January 4th, if I'm not mistaken. That's where I have it sitting at. So if we flush under that 442 half on SPY, then I will likely start to turn a bit more bearish. But right now, I'm neutral to bullish. Once we end up hitting that spot of that 442 half, is likely when I'm gonna start to buy that dip, and I'm hoping that's gonna end up happening tomorrow morning, and I'll be able to buy that dip right at market open. So, hopefully the big takeaway pretty much helped you guys. Looking at the charts helped you guys. But other than that, kind of wraps it up here for me today. I'll be out. Drop a like. Appreciate you guys joining, and I'll see you guys on live tomorrow morning. Later, guys.